Hi students. So in the previous video, we have seen the theory part of the last chapter, that is chapter 5, set off and carry forward losses. So under the same chapter, we are going to solve the problems on the individuals or assessment of individual concept. So before starting the problems on the assessment of individuals, so let us see the format for calculating the total income and total tax liability. So under the assessment of individual, we need to calculate the total income, and based upon the total income, we are supposed to calculate the tax liability. That is nothing but how much tax amount the assessee has to pay to the government. So let us see the first one, calculation or format for calculating the total taxable income. So first, assessee, status, previous year, assessment year. So first we need to take all the 5 heads of income. So already we have solved the problems on the 5 chapters or the 5 heads of income. That is income from salary, income from house property, income from business or profession, income from capital gain. So under capital gain, we need to exclude the long-term capital gain as well as the short-term capital gain, which is liable for the security transaction tax. Means before making any deductions, we need not to include the long-term capital gain and short-term capital gain, which is liable for security transaction tax. After making the deduction, so you can observe that after claiming the deductions under section 80C to 80U, after that we need to add the long-term capital gain as well as the short-term capital gain, which is to be liable for security transaction tax. So last one, taxable income from other sources excluding casual incomes. So there are two options. One, we can exclude the casual incomes from the income from other sources. After claiming the deductions, we can add back the amount. Second option, we can include the casual incomes, and after the deductions, we need not to add back the casual income. So we have the two options. So first, whenever you are calculating the total taxable income, first we need to calculate the gross total income, that is total of or aggregate of income from salary, income from house property, income from business or profession, income from capital gain, excluding long-term capital gain and short-term capital gain, liable for security transaction tax, and taxable income from other sources, excluding the casual income. So after totaling, we'll get the balance called as other gross total income, because we are not included the long-term capital gain, short-term capital gain liable for security transaction tax, and casual income. So that's why the balance will be called as other gross total income. So from the other gross total income, we need to minus the deductions under section 80C to 80U. So already we have seen the theory part and we have solved the problems on the deductions under section 80C to 80U in the chapter 4. Now after claiming the deductions, we'll get the balance amount. So that balance amount will be called as other total income. So for the other total income, we need to add the casual income, long-term capital gain, short-term capital gain liable for security transaction tax, and deemed income or assumed income. So we need to add back the amount. So after adding back all this, they will get the balance called as total taxable income or net income. So this is the format for calculating the total taxable income. So STT is nothing but security transaction tax, LTCG long-term capital gain, and STCG short-term capital gain. Now next we'll see how to calculate the tax liability, or what is the format for calculating the tax liability. So first we have segregated into different categories. So we know that tax on casual income, that is at 30%, we need to calculate the tax on casual income. So we need to take the amount. Tax on unexpended cash credit, investment, money and expenditure at 30%. That is nothing but deemed income. So on that we need to calculate the 30% of tax rate or tax amount. Next, tax on long-term capital gain at 20%. Tax on short-term capital gain on listed equity shares, that is, which is liable for security transaction tax, at 15%. So be careful about the rate of tax. Tax on casual income 30%, tax on deemed income 30%, tax on long-term capital gain 20%, tax on short-term capital gain liable for security transaction tax 15%, and after leaving that, the other taxable income means from the total income we need to remove the casual income, unexplained cash credit, long-term capital gain, short-term capital gain liable for security transaction tax, and we'll get the balance amount, that is the remaining amount. So on that we need to calculate the tax at the slab rates. So tax on other taxable income, the slab rates will be applicable. So after calculating all the tax, we'll get the balance amount, that is total tax 1 plus 2 plus 3 plus 4 plus 5. So all the 5 will be added. Now after calculating the tax amount, now we need to minus the rebate under section 87A. So rebate is nothing but it's an amount of deduction where the assessee can claim from the total tax amount. So there are certain conditions we need to follow in order to claim the rebate under section 87A. So that will be explained in the next slide. So from the total tax, if we need to claim the rebate under section 87A, and after claiming the deductions or after claiming the rebate, now we'll get the balance amount. So that balance will be called as total tax. And from that total tax, we need to add, for the total tax, we need to add surcharge if applicable. So even the surcharge conditions will be explained in the next slide. Add health and education cess at 4%. So be careful. This health and education cess should be calculated on the total tax amount. Total tax amount is there, right? So on that we need to calculate the health and education cess. And even the surcharge also will be calculated on the total tax amount after claiming the rebate. Now after adding the surcharge and after adding the health and education cess at 4%, now we'll get the total tax amount. And for the total tax, we need to add the interest on penalty. Interest or penalty. Interest is nothing but any amount which has been paid by the assessee in extra. Means if he is delayed to file the returns, or if he has not paid any income tax to the government and is supposed to pay additional amount called as interest or penalty, so such amount should be added back to the total tax. And after adding that, we'll get the balance called as total tax. And from that, we need to minus the tax paid on self-assessment. So we already seen the different types of assessment, and if any assessee has paid the tax based upon his assessment or based upon his calculation, and that amount should be minused. And if he has paid any advance income tax paid, such amount also should be minus, and any tax deducted at source. So under the chapter 4, under chapter 3, we have seen the TDS concept, that is before when he earned the income or when he receiving the income, the tax amount will be deducted and the amount will be paid to the assessee. So in such a case, if any tax has been deducted from the source, such amount should be minus from the total tax. So after minusing all the items, we'll get the balance called as tax payable or tax refundable. So tax payable, if it is positive, we are supposed to pay the amount. If it is negative, that amount should be recovered from the income tax department. So this is the format for calculating the tax liability. Next, we'll see what is the tax slab rates. So here tax slab rates has been classified according to the assessment year 1920, because our previous year will be 18 and 19 and assessment year 19 and 20. So here we have segregated the tax slab rates on a 3 categories. One, that is for individual who is less than 60 years. Second, we will be called as senior citizen, that is more than 60 years but less than 8 years. And third category, super senior citizen. So before you are calculating any tax liability of an individual person, we need to check what is the age of an individual, whether he is less than 60 or whether he is more than 60 or less than 80, he will be called a senior citizen, or if he more than 80 years, then he will be called as super senior citizen. So based upon that resident or based upon that category, we need to apply the tax slab rates. So first category, if he is less than 60 years, so up to 2,50,000, no amount will be paid in the form of tax. So we have already calculated the total income. So if the total income is less than 2,50,000 or up to 2,50,000, no need of paying any tax to the government. And from 2,50,000 to 5 lakh, the tax rate is 5%. 5 lakh to 10 lakh, 20% is the tax rate. And above 10 lakhs, 30% will be the tax rate. So be careful regarding the tax percentages. So if the individual who is less than 60 years, up to 2,50,000, he can claim the exemption. Above 2,50,000 and below 5 lakh rupees, 5% of tax has to be paid. More than 5 lakh and less than 10 lakh, 20% of tax has to be paid, and above 10 lakhs, 30% of tax to be paid. And second category, if he is a senior citizen, that is more than 60 years but less than 80 years. Now up to 3 lakh, he can claim the exemption or tax will be nil. But if more than 3 lakh, less than 5 lakh, tax rate is 5%. More than 5 lakh, less than 10 lakh, tax rate is 20%. And above 10 lakhs, the tax rate is 30%. So this will be the tax slab rates for the senior citizen whose age is more than 60 years but less than 80 years. And third category, super senior citizen, that is whose age is more than 80 years. So if he is a super senior citizen, up to 5 lakh rupees, he can claim the exemption or tax rate will be nil. But if more than 5 lakh and 10 lakhs, the tax rate will be 20%, and above 10 lakhs, the tax rate is 30%. So this is the tax slab rates for the individual who is less than 60 years, senior citizen more than 60 years, less than 80 years, and super senior citizen more than 80 years. So based upon the age, we need to apply the tax slab rates and we need to calculate the total tax amount. Now, we need to understand the rebate under section 87A. So rebate under section 87A will be applicable to an individual person whose total income, if it is less than 3,50,000. So be careful. The rebate will be calculated only if the total income is not or it is less than 3,50,000. Then we are supposed to calculate the rebate. So the rebate amount will be 100% of total tax amount or maximum 2,500, whichever is less. So first, whenever you are calculating any rebate amount under section 87A, first check the total income. If the total income is less than 3,50,000, then he is eligible to claim the rebate. If the total income is more than 3,50,000, we are not supposed to calculate any rebate under section 87A. So if the total income is 3,50,000, now the rebate amount will be 100% of total tax amount or rupees maximum 2,500, whichever is less. So that amount has to be minus from the total tax amount. So here we need to claim the rebate. Okay. So surcharge. So if the income or the total income is more than 50 lakhs, then 10% of surcharge will be applicable. And if the total income is more than 1 crore rupees, then 15% of surcharge will be applicable. But in case if the total income is less than 50 lakhs, no need of calculation of surcharge. So be careful. Rebate will be calculated if the total income is not exceeding rupees 3,50,000. So he is eligible to claim the rebate under section 87A. That is total tax amount or maximum of rupees 2,500, whichever is less. But surcharge will be calculated only if the total income is exceeding 50 lakhs, then 10% of surcharge will be applicable. If more than 1 crore, that is if the total income is more than 1 crore, then 15% of surcharge will be applicable. But in case if the total income is not exceeding 50 lakh or less than 50 lakhs, no need of calculating the surcharge. So conditions will be applicable for rebate as well as the surcharge. But health and education says we are supposed to calculate the 4%, or we are supposed to calculate at the rate of 4%. That is total income tax as well as the surcharge. Okay. So already I have explained that first we need to calculate the total tax. From that we need to claim any rebate under section 87A. If it is not exceeding more than 3,50,000, that is maximum amount will, or the deduction amount will be, rebate amount will be total tax amount or maximum of 2,500, whichever is less. And after that we'll get the total tax. On the total tax we need to calculate the surcharge if applicable. If the income is more than 50 lakhs, 10% of surcharge will be applicable. If the total income is more than 1 crore, then the surcharge, the rate of 15% will be chargeable. And after calculating the surcharge, we'll get the balance amount and total that. And based on total, we are supposed to calculate the health and education cess. Okay, so this is the format for calculating the tax liability. So let's see the problem number 1. So first one, compute the amount of income tax payable for the assessment year 1920 in the following cases. So they have to calculate the tax amount which is payable by the assessee for the assessment year 1920. So they have given the 3 situations or 3 cases. First one, total income of Mr. A or Mr. Amar Gupta, rupees 3,40,000. Second one, total income of Mistress Jyoti Gupta, rupees 5,20,000. Total income of Mr. Animesh Das, rupees 6 lakh, senior citizen. So we have the 3 situations or 3 cases. So let us solve the first case, that is the total income of Mr. Amar Gupta, rupees 3,40,000. So case 1, computation of tax liability of Mr. Amar Gupta. So since they have not mentioned the age of the assessee, so it is assumed that he is less than 60 years. So tax rate or the tax slab rates will be applicable. That is up to 2,50,000. The tax rate is nil, and 2,50,000 to 5 lakh, the tax rate is 5%. 5 lakh to 10 lakh, tax rate is 20%. Above 10 lakh, the tax rate is 30%. So apply the same thing. So the total income of Mr. Amar Gupta is 3,40,000. So up to 2,50,000, we can claim the exemption. So up to 2,50,000, the tax rate is nil. Okay. Now from 2,52,000, what is the total income? That is 3,40,000. So from 2,52,000 to 3,40,000. So if you observe, the difference amount is 90,000. Means from 2,50,000 to 3,40,000. So the difference amount will be 90,000. So when the category, that is from 2,50,000 to 5 lakh, the tax rate is 5%. So since the 3,40,000 will fall under the 2,50,000 to 5 lakh category, so it is eligible for 5% tax rate. So first we need to take the difference amount. So difference amount is 90,000. So rate of percentage is 5%. So 90,000 into 5% will get the tax amount 4,500. So total, we'll get the total amount or total tax amount is 4,500. Now from the total amount, we need to minus the rebate under section 87A. So the condition says that if the total income is not exceeding rupees 3,50,000, then he is eligible to claim the rebate under section 87A. So if you check the problem, the total income of Mr. Amar Gupta is 3,40,000. So he is eligible to claim the rebate under section 87A. So amount is total tax amount, that is 4,500, or maximum amount 2,500, whichever is less. So 4,500 or 2,500, whichever is less, So lesser amount is 2,500. So we have taken 2,500 as a rebate under section 87A. So from the total amount or total tax amount 4,500, we need to minus the rebate 2,500. So we get the balance amount to 2,000. And for that we need to add the surcharge if applicable. So condition says that if the total income is exceeding 50 lakhs, 10% of surcharge will be applicable. If the total income is more than 1 crore, 15% of surcharge will be applicable. So if you check, the total income is less than 50 lakh because 3 lakh 40,000. So no need of calculation of surcharge. So surcharge will be nil. And compulsorily we need to calculate health and education cess at 4%. So this health and education cess should be calculated on the tax amount. Be careful. Total tax after minusing the rebate and after adding the surcharge, what balance we'll get. On that balance, we need to calculate the health and education cess at the rate of 4%. So 2000 into 4% will get the 80 rupees. That is the health and education cess. So after adding that, we'll get the total tax amount which has to be paid by the assessee, that is Mr. Amar Gupta, is rupees 2080. So this is the process or procedure to calculate the tax liability. Now next we'll see the second case, that is total income of Mistress Jyoti Gupta rupees 5,20,000. So case B, calculation of tax liability of Mistress Jyoti Gupta. Total income of Mistress Jyoti Gupta rupees 5,20,000. So even in this category, they have not given the age of the assessee. So the age is less than 60 years. So same, that is up to 2,50,000, tax rate is nil. 2,50,000 to 5 lakh, tax rate is 5%. 5 lakh to 10 lakh, tax rate is 20%. Above 10 lakh, tax rate is 30%. So total income of Mistress Jyoti Gupta 5,20,000, and under that up to 2,50,000 no tax amount. So tax amount is nil. And from 2,50,000 to 5 lakh, so that is the second situation, second category. 2,50,000 to 5 lakh, 5% amount. So why we have taken the 2,50,000 to 5 lakh? Because it is more than 5 lakh amount, correct? So 2,50,000 to 5 lakh, the difference amount is 2,50,000. So if you check, the difference between 2,50,000 to 5 lakh is 2,50,000. Now for that tax rate is 5%. So 2,50,000 into 5%, the tax amount is 12,500. And if you observe, the total income is 5,20,000. Now 5 lakh to 5,20,000, we need to take the restriction because total income is 5,20,000. So 5 lakh to 5,20,000. So difference amount is 20,000. So third category at the rate of 20%. So 20,000 into 20%, 4,000 is the tax amount. So if you check how to confirm that, 2,50,000 plus 2,50,000, that is 5 lakh, plus 20,000, 5,20,000 is the total income of the assessee. Now the total tax amount is 16,500, that is 12,500 plus 4,000, 16,500. Now we need to check whether the assessee is eligible for rebate under section 87A. So the condition says that if the income is less than 3,50,000 or the total income less than 3,50,000, he is eligible to claim the rebate. But if you check, the assessee is earning the total income of 5,20,000, which is more than 3,50,000. So she is not liable to, or she is not eligible to claim the rebate under section 87A. So that's why we have not taken, or we have not calculated the rebate. And after claiming the rebate, for that we need to have the surcharge. Conditions apply. If the total income more than 550 lakh, 10% of surcharge. More than 1 crore, 15% of surcharge. So if you check, the total income is not exceeding 50 lakhs, or which is less than 50 lakhs. So no need of calculating the surcharge. So 16,500 will be the total tax amount. Now from that, for that we need to add the health and education cess at 4%. So total tax amount 16,500 into 4%, so we'll get 660. So after that we need to add the both. So total amount or total tax payable amount is 17,160. So this is the second case. Now let's see the third case, case 3, computation of tax liability of Mr. Animesh Dash, senior citizen, that is more than 60 years or less than 80 years. So the category says that second one, for a resident senior citizen up to 3 lakh, nil, 3 lakh to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, about 10 lakh, 30%. Okay, so the total income of assessee is 6 lakh. So since he is a senior citizen, up to 3 lakh he can claim the exemption, or the tax rate is nil. So we have taken the nil. Now from 3 lakh to 5 lakh. Okay, so 3 lakh to 5 lakh we can take because the total income is 6 lakh. So 3 lakh to 5 lakh, if you observe the difference amount, 2 lakh, correct? So 2 lakh and the rate of tax is 5%. So 2 lakh into 5%, 10,000. Now from 5 lakh to 10 lakh. So we need to take the 5 lakh to 10 lakh, but the total income is only 6 lakh. So 5 lakh to 6 lakh, that is difference amount is 1 lakh into 20%, that is the rate of tax. So 1 lakh into 20%, the tax amount is 20,000. Now we need to total that. So total tax amount is 30,000. Now from that we need to check whether he can claim the rebate under section 87A. Condition: if the income is less than 3,50,000, he can claim the rebate. If it is more than 3,50,000, no rebate will be claimed. So the total income is 6 lakh, which is more than 3,50,000. So no rebate will be calculated. So rebate nil. And surcharge, we need to add surcharge if the income is more than 50 lakhs, 10%, more than 1 crore, 15%. So the total income is less than 50 lakh, so no need of calculation of surcharge. And after that, we need to add the health and education cess at 4%. So 30,000 is the tax amount into 4%. So 30,000 into 4%, 1,200 will be the tax amount. So total tax payable is 31,200. So whenever you are calculating any tax liability, tax payable amount, so be careful, based upon the age, we need to segregate the, or we need to calculate the tax amount. Problem number 2. From the following information, compute gross income tax for the assessment year 2019-20 of Mistress Fatima resident. So they have given that we need to calculate the gross income tax for the assessment year 19-20. So let us see what are the information they have given. First one, they have given the gross salary. So if you check, they have clearly mentioned that it's in gross salary. So first we need to calculate the net salary. So net salary will be calculated, that is gross salary into, gross salary minus deductions under section 16, that is standard deduction at 40,000. So first we need to take the gross salary. From that we need to minus the deductions under section 16, standard deduction 40,000. And after minusing that, we'll get the balance amount, that will be the net salary. Second one, interest earned on NSC they have given. So interest earned on NSC, it can be taken to the heading called as income from other sources. Interest on NSC. Next, interest on bank fixed deposit, they have given as in gross, or we have taken it as in gross amount, so 77,000. So both will be taken to the income from other sources. Next, expenses on rehabilitation of handicapped son, so it can be claimed as deduction under section 80 DD. Okay, so any rehabilitation expenses, that is disability person, we can claim the exemption under section 80 DD. Next, deposited in RPF, that is recognized provident fund, so it can be claimed as deduction under section 80C, that is deposit in recognized provident fund. Next, LIC premium paid, again any LIC premium paid by the assessee, you can claim the deduction under section 80D. So now we need to calculate the total income and total income tax payable by the assessee. So let us see the solution part. Heading, calculation of total income, assessee, Mistress Fatima, status resident, assessment year 1920, previous year 1819. First one, we need to take the gross salary because they are not given the net salary. So gross salary 3,40,000. From that we need to minus the deductions under section 16, that is standard deduction. So here write down standard deduction, that is 40,000, because we have already solved the problems in the 5th semester regarding the salary part and house property part. So standard deduction 40,000. So the net salary is 3 lakh rupees. So 3,40,000 minus 40,000, 3 lakh will be the net salary. Second heading, income from other sources. So we have two income, that is interest on NSC, that is 8,000, and interest on bank deposit 77,000. So we need to total that, and the total income from other sources is 85,000. So they have not given any other information regarding the other rates, that is house property, capital gain, or business or profession. So we need to total that, and that total amount will be called as gross total income. So gross total income is 3,85,000. Okay. Now from the gross total income, we need to minus the deductions under section 80C to 80U. So in the problem, they have clearly stated that interest earned on NSC. So any subscription of National Savings Certificate or any interest earned on the National Savings Certificate, we can claim the deduction under section 80C. Already we have seen the theory part of deductions under section 80C to 80U under chapter 4. So any interest earned on NSC 8,000, deductions under section 80C, deposit in RPF 15,000, LIC premium paid 5,000. So these are the investment on a specified assets. So we need to total that. So 8,000, 15,000, 5,000, total will be 28,000. Now 80C maximum amount is 1,50,000. So 28,000 or maximum limit of 1,50,000, whichever is less. Okay, so lesser amount is 28,000. So under section 80C, the deduction amount is 28,000. And deductions under section 80DD, they have told that is incurred the expenses on rehabilitation of handicapped son. So here they have not given the percentage of disability. So under section 80DD, we can claim the deduction for the any expenditure incurred by the assessee for rehabilitation of the handicapped relative. So disability percent is less than 40%, no deduction amount. If it is more than 40% and less than 80%, 75,000 will be deduction amount. And if it is more than 80% of disability, 1,25,000 will be the deduction amount. So here they have not given the disability percentage. So we have assumed that the disability is percentage, or it is assumed that 40% to 80%. So disability is assumed at 40% to 80%. So deduction amount is 75,000. So 80C 28,000, 80DD 75,000. So total amount is 1,03,000. So gross total income 3,85,000 minus deductions under section 80C to 80U 1,03,000. So balance amount 2,82,000. So this will be called as total income. But in the problem, they have asked to calculate the tax liability also. So first, write down the heading called as calculation of tax liability. So we have seen the category to calculate the tax liability or format to calculate the tax liability. So any casual income, 30% of tax will be there. Any deemed income, 30%. Any long-term capital gain, 20%. Short-term capital gain, liable for security transaction tax, 15%. And other income, that applicable tax rate will be applicable based upon the slab rates. Okay. So here we not have any income called as long-term capital gain, short-term capital gain liable for security transaction tax, casual incomes, and deemed income. So we have only other income. So total or the tax on total income is 2,82,000. So total income is 2,82,000, and they have not given the age. So if you check the problem, they are not given the age of the assessee. So it is assumed that his age is less than 60 years. So tax rate, slab rates will be up to 2,50,000. He can claim the exemption, that is the tax rate is nil. More than 2,50,000 to 5 lakh rupees, 5%. More than 5 lakh to 10 lakh, 20%. More than 10 lakh, 30% will be the tax rate. So total tax amount is 2,82,000. So 2,82,000 minus up to 2,50,000, he can claim the exemption. So balance amount 32,000. Okay. So 32,000 at the rate of 5%. So 32,000 into 5%, the tax rate is 1,600. Now we need to check whether he can claim the rebate under section 87A. Condition: if the total income is less than 3,50,000, he can claim the rebate. If it is more than 3,50,000, the rebate amount will not be applicable. So if you check the solution part, the total income is 2,82,000, which is less than 3,50,000. So he is eligible or she is eligible to claim the rebate under section 87A. So my amount will be tax amount, that is 1,600, or maximum limit of rupees 2,500. Okay, so whichever is less. So tax amount is 1,600 and maximum 2,500. So lesser amount is 1,600. So 1,600 will be the rebate. So now we need to check whether we can claim the or we can calculate the surcharge. So surcharge condition: if the total income more than 50 lakhs, 10%, more than 1 crore, 15% will be the surcharge. So but the total income is less than 50 lakhs, so no surcharge will be applicable. Now we need to check whether we can claim the or we can calculate the health and education cess at 4%. If you check the solution, that is tax amount is supposed to pay is 1,600, and he can claim the rebate under section 87A, that is 1,600. So no tax amount is available. So we are not going to calculate any health and education cess at 4% because no tax amount is available. So health and education cess is nil. So balance, that is total tax liability, is nil. So this is the solution of problem number 2. Next problem, problem 3. Mr. Keshav, a resident assessee, furnishes the following of his income and expenditure relevant for the previous year ending March 31st, 2019. So let us see the income and expenditure which has been given by the assessee. First one, business income 95,500. So they only given the business income. So it's in one part of or one head of income. Second one, winning from lottery 4,500. So it can be taken under the heading called as casual income. So whether it can be taken to the head called as income from other head, or we need to add back to the total income after the deductions. So winning from lottery, so the condition, it is since it is less than, they have not given any word called as gross or net, and we need to check that what is the amount. So amount is less than 10,000, so no need of gross up because the no TDS amount will be deducted. So winning from lotteries and casual income. Next, donation to the PM National Relief Fund. So they have given the assessee is giving the donation to the PM National Relief Fund. We can claim the deduction under section 80G. That is, we have 4 categories. First one, 100% deduction without any maximum limit, 50% deduction without any maximum limit, 100% deduction with maximum limit, 50% deduction with maximum limit. So first category, any amount which has been given or donated to the any national, state, or the any disaster fund or disaster related associations. Category 2, any amount which has been given for the Nehru family or the Gandhi family or drought relief fund. So 50% of deductions can be claimed without any maximum limit. Third category, 100% of deductions can be given for the 2 institutions or 2 funds. One is any contribution made for the promotion of family planning, and second, any amount which has been contributed for Indian Olympic Association. And fourth category, 50% reduction with maximum limit, any charitable institution or any notified temples, mosques, or etc. So donation to PM National Relief Fund, it falls under the first category, that is 100% reduction without any maximum limit. Second one, donation to Government of India for promotion of family planning. So they have clearly mentioned that the donation has been given for the family planning promotion. That is category 3, 100% reduction with maximum limit. Next, donation to public charitable institute. So category 4, that is 50% reduction with maximum limit, being an approved institution for section 80G. So they have clearly mentioned that the charitable institution is an approved institution by the government or the income tax department. So come to this total income for the assessment year 1920. So we have the one income called as business income, and second one we have the winning from lottery. So this income will be added back after claiming all the deductions under section 80C to 80U. So let us see the solution part. First one, heading as calculation of total income, assessee Mr. Keshav, status resident, assessment year 1920, previous year 1819. First one, they have given the business income, that is 95,500. So we have taken business income 95,500. Other income, they are not clearly mentioned, that is house property, salary, capital gain, or income from other sources. But they have given the income from winning from lottery. So I already told that the casual income can be taken before the deductions or after the deduction. So it depends. So the winning from lottery has been taken after claiming the deductions. So other income, no income has been given. So other income is nil. Now the other gross total income is 95,500. You can observe they have taken, or we have to write the other gross total income because we have not added the winning from lottery, that is casual income. Now from that we need to claim the deductions under section 80C to 80U. So you can observe there is no any specific deductions, but they have given the donation for the institutions. So we need to claim the deductions, or we need to calculate the deductions under section 80G. First one, 100% reduction without any maximum limit. Second one, 100% reduction with maximum limit. Third one, 50% reduction with maximum limit. Now let's see how to calculate the deduction amount under section 80G. So note 1. So here I have written the note 1. So first one, donation to PM National Relief Fund, gross qualifying amount. So they are contributing 11,000 rupees. So without any maximum limit, we can claim the deduction. So net qualifying amount is 11,000. So gross qualifying amount 11,000, net qualifying amount 11,000. So rate of deduction is 100% because it falls under the first category, that is 100% deduction without maximum limit. So deduction amount is 11,000. But if you check that second and third one, they have given for promotion of family planning 100% reduction with maximum limit and a 50% reduction with maximum limit. So how to calculate that? Donation to family planning 3,000, donation to public charitable institution 12,000, correct? So what to do? First we need to calculate the net qualifying amount. So for calculating the net qualifying amount, we need to identify the adjusted gross total income because there is a maximum limit. So first one, net qualifying amount equals to 100% of adjusted gross total income or total donations under section group 3, whichever is less. So how to calculate the adjusted gross total income? We have already seen that the formula for calculating adjusted gross total income is other gross total income minus deductions under section 80C to 80U except 80G and 80GG. So be careful when you are calculating deduction for 80G, then we need to leave the 80G and we need to take all the deductions. And if you are calculating 80GG deductions, then we need to leave the 80GG amount and we need to minus the other deductions. So here we have calculating the 80G. So other gross total income minus deductions under section 80C to 80U except 80G, and for that we need to have the casual income. Okay, this is the formula for calculating the adjusted gross total income. So other gross total income is 95,500. So 95,000 we have taken, 500 we have taken, plus minus deductions under section 80C to 80U except 80G. So other than 80G, there is no any deduction amount because in the problem they are not given any other deductions information. So deductions under section 80C to 80U nil, plus casual income, that is winning from lottery, which is less than 10,000 gross up amount. So we have taken directly 4,500. Okay, so total adjusted gross total income is 1 lakh rupees. Now calculate the net qualifying amount, that is 10% of adjusted gross total income or total donations under section group 3 and 4. So 1 lakh into 10%, that is 10,000. Total donation contributed by the assessee, that is under 3 and 4 category because we have the maximum limit, that is 3,000 plus 12,000. Okay, so 3,000 plus 12,000, total donation is 15,000. So be careful, 3,000 is 100% reduction with maximum limit, 12,000 50% reduction with maximum limit. Okay, now 10% of adjusted gross total income is 1 lakh. So 1 lakh into 10%, 10,000 will get, and total donation contributed by the assessee under category 3 and 4, that is 15,000. So 15,000, whichever is less. So lesser amount is 10,000. So that 10,000 is net qualifying amount. Now we are going to calculate, or we are going to take the amount for 2 donations. So let's see. First one, donation to family planning 3,000 and net qualifying amount is 3,000 we have taken. Why? Because the rate of deduction is 100%. So net qualifying amount 10,000, 3,000 we have taken for the donation to family planning as net qualifying amount. So rate of deduction is 100%. So 3,000 into 100%, the amount of deduction is 3,000. Okay, be careful. 10,000 is the net qualifying amount. We can take the net qualifying amount for the 2, that is donation to family planning, 3,000 rupees. So rate of deduction is 100%. It falls under the third category, that is 100% deduction with maximum limit. So 3,000 will be the amount of deduction. Next, third one, donation to public charitable institute, 12,000 is the gross qualifying amount. Net qualifying amount will be 7,000. Why? Because the net qualifying amount for 3 and 4, that is 3,000 and 12,000 is 10,000. Already we have taken 3,000 for the family planning donation. So balance amount is 10,000 net qualifying amount minus already we have taken 3,000. So balance amount is 7,000 for the donation to the public charitable institution. So rate of deduction is 50% because it falls under the fourth category, 50% deduction with maximum limit. So 7,000 is the net qualifying amount, and 50%, the rate of amount of deduction is 3,500. Now total the amount of deduction 11,000, 3,000, 3,500. So total deduction amount is for 17,500 under section 80G. Okay, now we need to take the deduction amount under section 1780G, 17,500. So the balance amount, that is other gross total income 95,500 minus 80G amount 17,500, balance 78,000. So that will be called as other total income. Now for that, we need to add the casual income because we have now taken in the gross total income. So add winning from lottery. Since the amount is less than 10,000, no need of gross up. So 4,500. So 78,000 plus 4,500, total income is 82,500. So whenever you're calculating total income, so be careful what is the deduction amount and what is the information they have given in the problem.